Good evening, ladies and gentlemen. Today is expiry week, and what an interesting day it was. My initial trade idea was very good, and I managed to benefit quite a lot from it. But over the course of the trade, I made a few mistakes, and I made one massive blunder, which is more from execution. The mistakes were actually trading mistakes, whereas the blunder that I made was an execution blunder. Managed to close in the positive, and honestly, though, I'm very kind of disappointed with something very fundamental that shouldn't go wrong that went wrong. So I'll just walk you through what the mistakes were and what the blunder that I made was. Okay, my initial trade on the Nifty was that the gap up will get bought, and I played this quite aggressively by right at the open, selling the 15700 iron fly. And my iron flies are more or less straddles only because my hedging is just for hedging benefit. So this was my initial trade and it did really well. So the dip got bought and we started heading higher. Now my idea was if we test yesterday's close, then risk manage the call side. Now what I could have done from this straddle position was probably go to a strangle position of 15700, 15750. But I managed it too aggressively because I was already sitting on a buffer, wherein I moved my entire straddle here, which, as you can imagine, didn't work out really well. On the downside as well, about here, knowing that I will not hold on, when we were breaking here, I switched it back to the straddle position. This was okay. This is forgivable because at that point, potentially, those who went short here yesterday could have led to a covering. So I wouldn't consider this too big a fault. But yeah, I aggressively managed towards the upside. Now, the second thing that went wrong, as we started heading lower and there was some kind of gamma expansion on the puts, I once again over aggressively managed the downside by moving the entire straddle. So generally, I risk off one side and then I bring the other side once there's confirmation. Confirmation would be to hold here and head higher or create a 20-30 point distance from this spot. Whereas I was doing both. I was rolling up my puts and rolling up my calls, giving me much more reversal risk. So here as well, I made the same mistake. I rolled down all of my calls. And at this point, I decided to risk off. Post risking off, during this fall, and this is where the blunder was committed, I was still fine. Like I was sitting in a good mark positive that entire time. I committed a massive blunder, which is visible here. So as you know, I used the Zerodha APIs to place orders, and here we go. So I ended up hitting at that point I was short the 15600 put, and I wanted to buy that back to short the 15550 put. Instead of doing that, and instead of doing it in the desired quantity, I ended up executing an order from here. I placed a single order in one go. Now, even if I wanted to place such an order, I would not place it in one go of 25,000 quantity because slippage alone will kill me at that stage. So I ended up buying the 15700 put instead of the 15600 put. And as soon as I realized my mistake, just seconds later, I wanted to exit. And by the time I exited, I lost about 20 points. So it was a massive execution blunder. And that's because I hadn't updated the sheet with the new strikes that I was sitting on fast enough. And anyway, that was a mistake made by me. And going forward, I'll have to ensure that I have all the strikes pre-updated in the sheet so that I don't have to manually update. But that cost me almost about 20 points. And regardless, towards the end, I still managed to close in the green by taking advantage of the spike in IV that was there. I hope you had a good trading session. I think today's trading session was more or less in line with what one could have expected. It was very much in the same range as what Nifty futures were trading at last night. And all said and done, I think it should have been a relatively easy expiry if you had kept your distance from this spot. Thank you so much for watching. I hope you have some good takeaways from this video. I think one good takeaway would be at which points I risked off during at least the last part of the fall, at least what the idea and thought process was there, and how it was risked off and managed towards the close. Thank you so much for watching. Have a great evening.
Want to meet like-minded traders and discuss option strategies, adjustments and more? Just type in Discuss Nifty in your Telegram search box and join the friendly trader community.
Good morning, ladies and gents. Looks like we're opening gap down. Global sentiment yesterday took a hit after there was talk of tapering, and 7 votes from the Fed committee were to start considering raising interest rates during 2022. So the subjective aspects, some amount of a correction, and today being an expiry, there might be a lot of longs that get stuck into a gap down. So we'll have to watch out for the first few minutes of trade. So I will take a back seat and then look for an entry as and when there seems to be a favorable entry. We'll keep you posted. Time is 9:15. So decided to take an aggressive approach in the gap down. I entered by selling the 15700 iron fly, and I did it at quite a good price at the gap down. So that gave me a positive delta on the iron fly, and the up move, which is basically the dip getting bought slightly, is benefiting this iron fly. At the same time, I didn't want my entire position to be an iron fly, so I have created about 60% at 15700 as an iron fly, and the remainder of 40% as a strangle of 15600 and 15750. Okay, a steady up move to 15700 after the gap down. Reliance holding above 2200, and Bank Nifty as well did not break below 34,500. So that's showing strength, and relatively to make my position easier to manage as well, I have taken in both the strangle legs into the straddle itself. Now with the 15700 straddle and also initial positions building around 15700, high level put unwinding and put writing at 15700, along with about 80 points as the current value, 80 to 83, gives us a pretty good risk reward on this trade. So my idea will be, if I am taking this trade, my potential gain can be anything from 30 to 50 points easily. So my risk appetite for the day will have to be 10 to 15 points. So it is very realistic that if the trade doesn't work out, we end up taking a loss of about 5 to 7 lakhs. But that is the kind of risk reward that we have taken on this trade. Of course, we'll do everything to make the trade work out, but in case it doesn't, one should be prepared for that kind of risk appetite. So we'll keep you posted on what happens so far after the gap down's been relatively flat yesterday as well. US markets made a big dip and then recovered almost about 50% of that by close. Yes, futures are in the negative now, but not does not seem to be too much downside. So the good spike in fear helped us, and it was a good call to take and in the money. Also, yesterday into the closing, I don't know if you follow me on Twitter, but I had made an adjustment to the Adani trade to protect against further downside. The idea was I have a short straddle at 15,000, and in order to protect that, and once again into the IV spike, I took a short straddle at 1400. So at 1500 balanced by 1400, this payoff will now basically look like that of a strangle, more or less, because all it is out the money strangle and in the money strangle, both that we are short. So high IV took it, so basically shorted and took in more credit at high IV, and now in this range the trade is quite profitable. So even though I added a leg yesterday, we are at a almost 5% profit to the trade. And power grid, there's nothing happening that requires an adjustment. After taking the trade yesterday, I had posted this trade on Twitter as well. There's been a continued IV spike, and I mean, the spot is perfectly centered around the strike, but there has been a continued IV spike. So, not going to do anything here to touch this trade. The remainder of the trades are perfectly all right to hold just as is. Yeah, I mean, after the gap down, we've been bought into and not seeing any selling. Reliance, especially, looking quite strong, almost 30 points now above 2200. I think the upper ceiling should be 15,800. We'll see how OI is building. At about 10 o'clock, we'll get a good idea of what the rest of the positions are looking like. So most likely, yesterday's close is going to act like some kind of resistance. And what's happening now is, despite the up move, almost holding 16, 17 points above 15,700, these calls are really not expanding. They're not getting covered. And from what is visible at the onset, 15,800 should now be a ceiling. And there are quite a few calls added at 15,700. With slowly now the put side also building up a lot of straddles and iron flies at 15,700. And these calls aren't really in threat of being covered as of yet. So all calls above 15,950 are being shifted to 15,900 and lower. So yeah, not too much upside is what I'm working with at this point of time. But if we start to test 15,750 on the upside, we'll be squaring off half the puts and moving them to 15,750. And then the other half if we break above 15,750. But that's the only plan for now. Okay, so a little bit of short covering happening now, wherein we're seeing an up move and these calls are spiking because demand is picking up for them. But at the same time, the puts haven't given up too much value. So, I mean, my idea will be I'll wait for the 15,750 put and 15,700 call to be trading roughly at the same price. So at a point when they're trading roughly at the same price, I will move half the puts in the money. And then if the calls then continue to gain from there and basically gain about 10 points over these puts, I will move the remainder of the puts in the money. I need there to be enough value on the call side where a fall off on the call side will be able to protect me before these puts explode in case there's a reversal. So that's more or less what it is. It's going from a straddle to a inverted strangle position, and initially with half and then with the other half. Because since we've gapped down, we've had only a single directional up move. In fact, that in all of this up move, the 15,750 call is trading at 22, and this entire time it's been trading between 20 and 22. Showing me that I shouldn't be in a rush. So there hasn't been particularly too big a spike in the past few minutes. Shouldn't be in a hurry to adjust. The idea will be, and generally this is how any straddle is adjusted, that first you go inverted with whichever winning strike of yours is there. And then in case that move continues, then you move your in the money strike to at the money position. I used to do a lot of straddles very frequently earlier. So in my initial videos, you'd see a lot of them are straddles and iron flies. And in fact, if you've been on Telegram, then you would have seen that much before I got onto YouTube. I used to mainly trade straddles. Yeah, so there's a little bit of fear building up on these call guys. So I'm not going to be too quick to go inverted. Even once the price is neutralized, I will wait for a test of 15,750. Yes, that will mean a market loss. But the thing is, Bank Nifty is taking resistance at 34,800. And yes, while IT does look strong, a lot of Reliance's up move has been negated almost by 10 points right now. So being in a rush, especially when people are covering. So people also cover calls by selling puts at the money and in the money. So in that time, to get on the same bandwagon would not be the best of things. So for now, it's quite comfortable. There is some fear on the call side, but I'm not expecting too much upside, and especially not upside above 15,800. So for now, we'll just stay with this as is. Okay, so we continue to hold strong with no sign of weakness, not a single downward trough since the open. These calls are expanding, but the puts are giving up a lot of value, so that's fine. I will wait for a test of 15,750 to do anything. And from the OI, what we're seeing now is into all this, 15,800 is slowly solidifying, currently available at 9 points as what should be a ceiling for the day. Should not be upside above 15,800. That's what the market is assuming. And more and more we're seeing, you see this green line of just made a steady up move, almost doubled in open interest to 60 lakh is the 15,700 put option. So that is showing strength at 15,700, but there are quite a few amount of 15,700 calls also which were built up earlier in the day, which have not exactly been unwound. So instead of unwinding the calls, there is put writing at 15,700. So people are making short straddles at 15,700. Now some amount of 15,750 will also build up, but it's too preliminary. The initial call to taken in the money put based iron fly was a good idea. Now I'm not going to be in a rush to adjust for this up move by doing anything to these calls. I will just hold off on it for now. I'll wait for a test, and I have enough of a buffer wherein I can do that. Okay, I'm now reaching a problem where, and this is why this is an issue, where the puts have given up so much value that a continued up move will not be protected by the put side. Puts have already given up too much value at 15,700. So I moved 40% of my puts to 15,750, which basically have an intrinsic value of 12 right now. So an extrinsic value of 34, and I need that in order to protect against a further expansion, especially if these calls quickly put on 10 points. Then all the work done since morning, entering at a good trade, all of that goes to the dogs. So it's all about protecting that. So 40% of the puts are now in the money. There's no difference between a 15,700 put and 15,750 call versus a 15,700 call and 15,750 put. It's all the same. So this is the change done with 40% of the position. Now, if we actually get to 15,750 on the spot, then I will move the remainder of the puts. Okay, so now part of the position is a short straddle and the other part of it is a short strangle. How you look at this short strangle is this is trading at 50 and 48.4. Basically, at the end of the day, this short strangle it will be worth 50 because it's in the money. The difference between the two, 50 points, will always have to be there in intrinsic value. So currently the extrinsic value is whatever this is minus 50. So roughly it's about 48 now. And similarly for the short straddle, see, intrinsic value nothing means nothing, but if this were to expire right now, how much is it worth? So if this were to expire right now, if this straddle position 15,737, then 37 would be the value of this position. So whatever extra is there right now, it's 75, right? So whatever remaining 33 is there, that is the extrinsic value. It means the time value. It's not very complicated. The reason selling in the money puts is not so dangerous is because my calls are also in the money. So not considering the mark to market that we are at, the current break evens on the strangle position are basically 15,800 on the upside and 15,650 on the downside. And of the straddle position, this is without considering mark to market, is roughly 15,775 on the upside and 15,625 on the downside. Now, assuming we expire, so basically, if we expire in the range that I'm expecting, which is either 15,700 or 15,750, then that'll work out quite well. Now, if we have a continued up move, then the idea will be to keep these puts right here. But in case that up move starts to halt and we start heading back down and we test 15,700 and head lower, we'll just reverse this step, that's all. So this is something that I mentioned before, but in one of the really older videos. Basically, whenever you're in a straddle position or an iron fly, you want the extrinsic value to always be more than the intrinsic value. Currently, less and less this position is becoming favorable because more and more the intrinsic value, currently intrinsic value is almost 40 points extrinsic value is only 30 points. So it's at that verge where I am getting ready to shift it, because this is not a good position anymore, wherein a continued directional move in the direction of the risk will not protect you, because most of it is already intrinsic value. There's not much time value in it. And roughly a 50% ratio is generally good, but right now, given that the price action is showing that Bank Nifty is taking a halt at 34,800, Reliance also has made a halt from its initial up move. Despite IT looking strong, I don't want to be too aggressive in adjusting for the upside. Okay, it's now reaching a point where these puts are going to be useless completely. So I'm going to move all the puts up. Yeah, slight margin issue for doing that. Because the more premium you take, the more margin you need to hold that position. Okay, now the whole thing is now a triangle of 15,700 and 15,750. The idea will be that eventually move up these calls to 15,750 slowly, maybe first half and then the rest each time, to deal with the fact that these puts might become at the money. We've had a relentless up move, just a non-stop up move. That slight delay in making the change cost me a little bit, cost me about 4 points, but yeah, I couldn't do anything. The idea was to wait until it was absolutely necessary to make the change. Okay, we'll be moving up the calls, half of them to 15,750, because you see there is only about 10 points of extrinsic value left here, so it doesn't make sense to sit on that. So half our calls are now at the money. Now half our position is a straddle at 15,750, and the other half is strangle between 15,700 and 750. I'll wait for 15,750 to hold for 15 minutes and then move all the calls to cap. Basically, what am I trying to do? I'm trying to have my position in such a way that there is always more time value in it than there is actual value to it. If that's how you choose to describe extrinsic and intrinsic value. So a steady 100-point plus up move since the open. So yeah, despite that, there still is a downside bias. The 750 puts are trading more than the 750 call, despite the 750 call being in the money. Okay, IT and Reliance are both going bonkers, and we continue to head higher. So I've taken all the calls and moved them to 15,750. Now, could this have been dealt with in a better way? I don't know. I felt like this was the best possible way to deal with it. I guess I could have been a little bit quicker in changing according to the market, but I think for now, this position makes sense to hold on to. I'm not expecting 15,800 to be taken out on the upside, and I will hold this position now, more or less. And the idea is, yes, if I do go wrong, I'm allowing myself about 15 points uh, worth of a loss for the day. And so far, I've more or less managed it as I should into this steady uptrend. We'll keep you posted. The slight currently the at the money straddle is worth only about 70 points at 10 o'clock, and I'm expecting either a 15,700 or 15,750 expiry, one of the two. So it's no incentive to push it over 15,800. The most likely expiry range is 15,700 to 15,800, with an expectation of 15,750 or 15,700 expiry. There is also one more remote possibility. If Bank Nifty starts to head to 35,000 and break, then 15,800 is very much a realistic possibility. But given current pricing, I wouldn't think much of it. My idea will be, as much as possible, let me not do anything to this position, because this position covers the entire range that I'm expecting, 15,700 to 15,800. So with that in mind, this position will cover additionally 20 points in either direction. So not overly concerned as long as that range holds. Some cooling off in this thing, and now it's time to dip. What I'm going to do is switch the entire position out just to have a larger range of profitability. So I'm going to buy back the 15,750 put and sell the 15,650. Also buy back the 750 call and sell the 800. There's about 20 points in that triangle. And what I want is a larger range of profitability, even if I have to compromise on profitability. I've got a 6-point profit right now on the iron ply. But the reason I'm doing this is there are a lot of longs that have been built up since morning. And if they start to get unwound, there could be some quick downside. And I would rather stay out of the way of that. The thing is, each time I change my position, I will have slippage. And there's absolutely nothing I can do about it. These are all market orders. Okay, so completely taken the risk off. This because a lot of longs are built up in the system. Now, if there's some kind of unwinding, I don't want to sit in the way of that. Obviously, the best case scenario would have been actually even that wouldn't have been the best case scenario because of how these calls are now been re-rated. The 15700 straddle is still trading at about 77, 78. These calls are not particularly giving up too much value. So regardless, this is 20 points that is there in the straddle, and I would much rather hold on to a position like this and have to manage this through the course of the day than the other, especially because of the quantity. Becomes difficult to manage and at the money straddle with a larger quantity. Anyway, there's a good 20 points here, and our hedges have 4. Okay, one more thing I've done for slight optimization is I've gotten rid of this 15900 hedge, which was for hedging benefit, and moved it to 16200. So this 2.3 here, and it's just 0.9 that I've paid for this. So that gives me a hedging benefit. Yeah, as long as we don't break 15700 on the downside, we'll not be adjusting this position. And if we break the day's high, then also we'll be adjusting this position. But if that neither of those conditions happen, then we'll keep this position as is. The time is 1:35. The data is suggesting very strong um, possibility of an expiry between 15700 and 15750. I'm not expecting much upside above 15750, and there might be a potential for downside below 15700, but right now there is a lot of strength in the 15700 put. So I don't see any reason as to why the market would be pushed below that. So yeah, this is my view, and more or less at this point I'm just trailing in the stop loss. There is 25, 26 points in this triangle itself. That gives us 25 on the upside and downside from 15,750 and 15,700. Basically trailing in a stop loss. This has been rather tricky. There's been some quick moves in either direction, um, rapidly expanding and deflating the position. Anyway, I will keep you posted. We've got about 1.5 hours to go for averaging, and 25 points is still a good amount of value in this triangle. Okay, so I'm expecting not too much downside from here. I'm expecting 15,700 to be the lower side of the move, but at the same, because Bank Nifty is making a higher low pattern, and Nifty IT has this ascending triangle situation going on, and Reliance as well. I'm not expecting too much downside from 20 to 100. So all these three are the situation, but it doesn't change the fact that Nifty is now at the lower side of the range, and potentially these puts, which are almost at the money, are now going to be exposed in case there is a down move. So to take some risk off, I have moved about 66% of the position on the put side lower by 50 points, and if we start breaking 15700, then I will move all of the puts down. So that is the plan. I made a mistake twice by aggressively shorting the 15700 call already, and I have no intention of doing that right now, because now it is more about protecting whatever mark to market gains are there. And I mean, So many points technically will be given up from this, but right now the idea is not to capture as much as possible, because lately so there are two reasons why I'm being extremely risk averse whenever it is going against me. One, because so global markets continue to be negative. We won't know how market has reacted completely until US markets play out tonight. So in case there are some positions that have to get unwound, and yesterday as well we saw all institutions unwinding positions, there might be some kind of last minute sell off, which I want to be um, protected against, which is why I've taken the risk on the put side off. It's just not worth it, especially when 14,700 itself is a very high likelihood expiry spot. So towards the end, I think I can move in by 50 points, depending on what happens as we head into averaging. Okay, list of part of the puts at 650. Now we'll be risking off all of them. I don't want the entire expiry to be wasted. At this point, it's just protecting mark to market. Almost unnecessary, but necessary because in case it does continue going, then the gamma expansion will be on a completely different level. One green candle of 10 points will crash these two under 10. It will be 3 points just like that. But in case that doesn't happen, the scan spikes, and they're already not even a green candle. Just once it halts, it's going to start losing value. I'm aware of that. But I can't sit on this because if there is like a quick 30-point move, then the rate at which these are going to expand will not make any sense. There will be a massive spike where you won't be given the opportunity to exit at any sane price, because there will suddenly be a lot of demand for it. So yeah, we've gone full circle, but basically right now there is how much left in this? There's about 6.75 points left in this. I'm happy to take that, and in case towards the end into averaging I'm able to take some more, then I will look at doing that as well. But for now I'm not going to be in a rush. The other thing is I do not want to move down my calls to 14,700. I don't want to do anything that is risk on into a move itself, because um, so far today I made some mistakes doing that, and I don't want to repeat that. So keep you posted. If we reach 15,650 on the downside and then we start breaking there, then we'll consider taking 15,700 call side trade. Until then I will not be doing too much. 15,600 is a very strong support. We've used, even in panic sell-offs, we've not reached this. Even during the sell-off yesterday, after the US markets news, we didn't break 15,700, 15,600. So basis that, yeah, I'm holding on to this. To keep you posted, time is 2:15. Some quick moves. If the value of this triangle starts exceeding 10, then I'll just take the exit and call it a day. No need to sit and fight. Not every expiry is going to be smooth sailing. Okay, quite the story, but basically I was short the 15,600 put, and in the down move I wanted to buy it back and sell the 15,550. Quite straightforward idea. What I ended up doing by mistake is hitting buy for 25,000 quantity on the 15,700 put, which was a very dangerous thing to do, because I ended up, so misclick, but I placed an order for such a large quantity, so slippage itself will be huge. And yeah, ended up buying this. And yeah, I tried to immediately undo the order, but just in undoing the order, about 20 points or so, 20 points given up, 20 into, in this case, of 25,000. So still, that's about 5 lakhs due to execution mistake, which should be completely unacceptable. It is unacceptable. Anyway, that happened, and it happens. The thing is, it was in such a quick manner that I had to get out in a panic, and instead of buying back what I was short, I ended up buying a different strike which I had set up. I hadn't updated the panic exit strikes yet, and yeah, very costly mistake. Now looks like after the dip is getting bought, and this has the potential to gain in value. So what I'll do is I'll wait for this to expand to something like 6 points, and if that happens, then I will just square that off and roll to the 15750. That's the plan. We'll keep you posted. Error cost me big time. Well, it effectively wiped out any and all gains I had for the day, more or less. Okay, 10 minutes to go for averaging. This triangle has about 4 rupees 80 paisa left in it, and um, honestly, given the blunder that I made earlier, I'm surprised I'm closing in. Will be most likely closing in green. There is one possibility of there being a quick up move all the way till 14,700 as soon as averaging starts. Now, if that's the case, we'll move up the put to 15,650 at that point. Wait and see though if that happens, and then accordingly exit on the 15,700 call if it starts to expand beyond 5-6, something like that. These are just different possibilities of what can happen. And intense day, a lot of mistakes made. I'll cover in the intro clip itself. I would have covered what are the mistakes that I made at different points. Apart from the execution error, also I made some other errors. So all of that I will cover. Okay, 4 minutes to go for averaging, and yeah, right now what it looks like is a 15,650 expiry, and couple of things to go over here. So many people sometimes get very confused on how pricing works. Your average is 22, it's 1.6, you should have made money. Why is it making 22 lakhs loss? People say, how can you look at a 22 lakh loss and keep stable? One thing that has to be put out very clearly here is my style of trading is not about, I don't particularly care about what each individual leg is doing. See, my hedge here has lost 1 lakh, the hedge has lost 30,000, hedge has lost these two, almost 2 lakhs is just hedging cost, and that is not even considering the fact that I kept switching the hedge around at different points. So just hedging cost itself is about 2 lakhs, and yeah, what each individual leg doesn't matter, because always balancing its risk, there's a counter leg. So yeah, it is making 22 lakhs loss, there's a 13 lakh profit here, there's a 10 lakh profit here, there's this 2 lakh profit here. So all of this, what is important is what is your bottom line looking like at different points. What is for example, the risk that this had when it made a loss is not the risk that it has right now. The only risk right now in my position is that I'm holding on to about slightly more than 3 points of credit, and my hedges put together have about 80 paisa. So 2 rupees 20 paisa is what I can gain, and what I can lose if this starts expanding to beyond 5 rupees, which is basically another 1 rupee 80 paisa from here. Then I will be exiting this position or taking in additional put side credit in case, like now we're having an up move just as we're heading into averaging. So there might be a situation where I have to cut out of these 15,700 calls. At the same time, the 15,650 put is trading at 5.4. So which one do you think the risk is more? Even though we're making an up move, the market is pricing this one at a higher risk. So I will have the opportunity to switch my risk into this on the downside if this starts to take a beating. Today's trade, expiry trade wise, I think the expiry also wasn't so bad. I made some errors, and that's why it cost me. I'm just glad that it didn't cost me more than what I would have liked to take. So I'm actually not at all like, see, right now, where is my frame of mind? I made a lot of mistakes. So what do I first need to do? Get those in order. Next time, have it in such a way that I always update my panic orders as soon as I switch my position around. Apart from that, not much else. I don't think it particularly affects me. And even though I made mistakes, I think I did it in a manner where at different points, except for the one which was completely out of my control, I more or less did it in a manner wherein I would not get hurt regardless of what happened. And many people say, what with this kind of position as a runoff move, you will take a lot of damage. Yes, but today is one of those examples where there was a runoff move, and had I executed as I intended, I would have managed quite all right, even in the runoff move. And even with a mistake, it's not really giving us a bad expiry. It's not giving us a negative expiry. Averaging should start in about a minute. The 15,650 strangle is trading for 21 plus 3, about 24, because of the up move. So sometime by, okay, the calls are definitely rocketing as we are making an up move. So we'll be on the watch out. I need this to expand to 5. This expands to 5. I will take on more put side credit, and if not, I won't. If it goes beyond that, then I just exit the calls because nothing is going to happen to these puts now. Okay, averaging has just started, and yeah, into averaging bank nifty, slight up move, but not much. And yeah, that up move is for now not a threat. Okay, since we're holding and into averaging, I will take on more put side credit. I'll just balance my strangle at this point. Still 1 rupee 50 paisa left in it, so might as well, especially considering that the call is at some risk, not much, but some risk. Okay, this is done. And averaging is a point where if whatever move has to happen doesn't happen fast enough, then even if the move does happen, there is not a lot that will come from it. Like it looks like we're making a run to 15,700, but actually the average is still 22 points below 15,700. Even though the spot is just 13 points. It has to be steady, fast, and like consistently on the upside. Otherwise, it won't happen. Anyway, this together is trading at something like 3.5. Realistically speaking, 5 will be the exit. So we'll keep you posted. We're just 2 minutes into averaging. And so far, while there is an up move, it's not strong enough. The entire average needs to be pulled above 15,700 for this to have any value, which is very difficult to do. Okay, so the longer we spend below 15,700, the more unlikely it is that the average ends up being anywhere close to 15,700. Going by what this 15,650 call is trading at, the average is still below 15,690. In fact, there'll be some time value in it. So, in fact, not happening. It's 15,685. So this is most likely. I mean, the moment there's a red candle, it's not going to happen. Once there's a red candle, this will crash very quickly. Okay, so one thing I get very often, I like, boss, whenever you're doing these last minute expiry things, it's just 5 points away. If there's a quick 20-30 point move for 1 rupee, you lose 30 rupees. No chance. Because, I mean, just weighted averaging does not work like that. You have to look at the average of the entire period, and it's not easy to pull it up. The thing is, we've not even spent 1 minute. It's almost 10 minutes done. We've not even spent 1 minute above 15,700. So the entire average, going by what the 15,700 is pricing, is still 3 points below 15,690. If that's the case, there has to be a massive up move. It has to be like 50 points, 100 points, and it has to hold there for that long. By the time the average starts to say, okay, this call option should be given some value, there won't be. There might be some people quickly getting out. There might be a demand supply mismatch due to which this might expand a little bit. But apart from that, there's not much reason. I mean, this put option has to go to 0 if this call option has to have value. This put option is trading at 10. So this put option has to go to 0 in order to let this call option go to 10. So unlikely. Anyway, right now it's trading at under 2 rupees, 3 rupees in my stop loss in case if it decides to do that. So anything below that, I'm comfortable to hold. Okay, I have my exit order ready to go because we're at 15,700, but being at 15,700 is not going to pull up the average. So this call option is not reacting. Being at 15,700 will not pull the average above 15,700. So yeah, this is one of those interesting situations. My stop loss is not being hit yet, but I have my orders ready to go to buy back the spread. But yeah, I think anyone who's buying this call option has very high hopes. I keep pointing this out, but I can't resist. We'll look at it, Nifty IT. Well, I didn't mention it in this ascending triangle formation or whatever, but look at the last minute move, because why not? I mean, if Nifty IT is like not the most manipulated index out there, I don't know what is that. It always on expiries, every expiry, and 1 day before the expiry and 1 day before the expiry. It's like, okay, Nifty IT is going to make wild moves to do index management. It's been the case for like months now. Like, go back and take a look at Nifty IT data. Okay, more and more the average is now getting pulled up. Not of concern to me, but now I will have a stop loss of 2.5 points roughly. So if this goes to 2.5, I'm exiting more or less. This is going to end worthless. 2.5 is going to be the stop loss on this half a point from where we are. If this IT move continues, most likely that stop loss is going to hit. There's almost no value left now in the 15,700 put either. Okay, first sign of a red candle and all of that is gone. Okay, 2 rupees can now be realistic stop loss. Exit at 2 rupees. I'll keep you posted. There's 9 minutes left till auto square off. Okay, it's 3:25. Should be getting auto squared off any second. I'm not doing any changes to my short straddle on power grid, and just going to keep it as is because I mean our strike is perfectly centered around, so no need to. I mean it's not giving us any profit and loss because the results are not out yet and the IV is still high. Okay, that squares it off. This Adani Enterprises, I made an adjustment yesterday, which now gives us a slightly, it gives us a positive delta. But I'll continue to hold this exactly as is. I'm not making any further changes to this. And yeah, most of the other trades are also most likely going to end up being worthless. All of them are almost certainly going to be worthless. I'll square off the positional trades on. I generally square off on Tuesday because the margin requirement goes up on Wednesday. So all said and done, closed in the positive, but a lot to take away from today's trade. And I hope you had a good expiry. It should have been relatively all right if you didn't get caught by the short covering in the morning and then the sell-off towards the close. Thank you so much for watching. I will catch you tomorrow. Also, just to add, and I do this every day, it's that all of my orders for the day, for some people who really want to go into depth of all the orders, right? All of them are available on our free Telegram channel. We don't charge for anything, we just have a discussion group where we put up everything. We've not sold a single product in the existence of Nifty BN. So you search for Discuss Nifty, and this is where we are. There are two Discuss Nifties, so there's one where you can type and one where you can't.
Thank you for watching. Please post any questions you have in the comment section. Also, do not forget to like and share the video and subscribe to the channel. To find us on Twitter, Telegram and Facebook, use the username NiftyBN. Also, we post some of our trades to the community tab. So do not forget to check that from time to time.